Hey, what's up, my friends? So welcome back to this month's market analysis for December, the final month of the year. So in today's video, we are going to do things a little different, right? So all my previous videos, I usually, draw the levels, the support resistance on my chart already. But today, this time around, we will start from a blank chart. So you kind of understand, right, how I interpret the price action of the market. How do I make sense, right, out of this chaos, the noise in the markets? Sounds good, right? If you enjoy, right, this way of, analyzing the markets, comment below. Let me know your thoughts, right? And if it's good, right, we will, do this, right, for the coming videos as well, for all the future monthly market analysis. So to kick things off, right, the first market that I want to share with you first is euro dollar. So if you look at this chart, again, right, analysis based on the daily time frame, you zoom out, you notice that this market, what is the market structure of euro dollar right now? If you ask me, it seems to be in a declining stage, right, in a downtrend where you see a series of lower highs, lower highs, lower highs, lower highs, and lower lows, lower lows, lower lows, lower lows, and you can see numerous lower lows. And the type of trend, right, that this is what I call a wick trend. Why do I call this a wick trend? Is because when you pay attention to the pullback on euro dollar, you notice that the pullback is pretty darn steep, right? Pulls back here, here, and here. The pullback is generally very steep. It's not like those type of strong trend where the pullback is shallow. No, this pullback is pretty steep. And for those of you who are familiar with Fibonacci retracement, you can just, pull out your Fibonacci retracement tool from swing high to swing low, and you'll notice that the pullback usually, right, hits at least the 618 ratio for those of you who use Fibonacci retracement. So again, let me just pull out an example to show you what I mean. So Fib retracement, where are you? Here, okay? And if I pull it from swing high to swing low, okay, this swing low over here, I just extend it out to the swing low. You'll notice that this market, okay, let me just drag it towards the right, okay. So I'm actually drawing to this swing low over here, right? Notice that the retracement, this one over here, right, almost, right, hitting the 618 level. Okay, so if you can do it for most of the wick trend, you realize that it tends to retrace towards the 618 level or more. So now that you know that this market is in a downtrend, the trend is weak, the pullback is deep, how do you trade it? So this is where I want to draw out or define my area of value. So this is where, I draw out my support resistance. So let me just draw out the key levels that I'm seeing right now on this chart. So right now what I'm seeing is over here, okay, here, possibly over here as well. And yeah, there are numerous levels, but let's just keep to this couple of levels for now, since these are the nearest level, right, that the price could retest to in the coming weeks or even days. So from the looks of things, right, you can see that this market, okay, I have drawn out this level over here, tested once, twice, right? Then we have a false break over here, and over here we have another test over here. So it's pretty much a level that's respected by the markets. Over here, it tested once, tested twice. Here is a more significant, tested once, twice, and thrice. If I zoom out a little bit, you can see any more times it's tested, right? Over here as well, right? Retesting back towards this breakout level, right? This breakout of this resistance over here. Price breakout, came back and retest back this previous resistance, right? This previous resistance that now becomes support. So this definitely, right, is another key level to be paying attention to. So from the looks of things, right, since this market is still in a downtrend, I want to be selling. So where is a good area to be selling? I would say, right, this level is a level or area you want to be paying attention to, between the $1, 1.115 to 1.12 area, somewhere about here. And if you pull out the 200 period moving average, okay, just a simple moving average, you realize something as well. I'll go with exponential. We'll have a look at the 200 period moving average. It's a longer term moving average. Typically, I set it to black. Okay. And you realize that this market, right, is respecting the 200 MA as well. Tested once over here, twice, thrice, and right now is at this level, which has the confluence of this area of resistance that we have drawn earlier. So this is definitely, right, a level you want to be paying attention to for the coming days or weeks. So a simple way to trade it is what I call a false break setup. You can let the price, right, trade here, make a strong move into this area of resistance, and then a sudden reversal, right, closing below this lows of resistance. So when that happens, right, traders who buy the breakout of these highs they are now trapped because they buy the breakout and the market makes a reversal and what the so they are now trapped, right? They are in the red. And where would this group of breakout traders set their stop loss? Chances are, somewhere here or even below this lows over here. So as the price hits lower, it's going to trigger this cluster of stop loss, right, from breakout traders. So this is how you can actually trade the false break setup, right? When the price breaks above the highs and makes a sudden reversal, closing back below this this resistance. So as for targets, as mentioned, right, this is an area to be looking out for, right? Price tested once, tested twice. This is a potential area to be looking to take some profits off the table, right? For swing trading, you can take profits off this table. And if you have, two targets, right? Target 1, target 2, your second target could be possibly at this area over here. Okay, so this is a trade to be looking out for, euro dollar. Moving on, euro pound. So again, this one, let's get back to basics, right? Let me just remove the 200 MA. Again, I like to zoom things out, right? So I typically zoom out about 5 to 10 times, right? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Okay, so it doesn't really matter how many times you want to zoom out. The main thing is that you want to see the big picture. So from the looks of things, all right, this market, it seems to have, just broke down of a range market. This is a long-term range over here. This highs, this over here, and this one over here. So recently, this is really bad drawing. So let me just plot out the key levels, right? Then you can see what I mean. This one over here, then another level over here, a pretty one over here, and the recent one over here. Okay. So you can see that generally this market has broke down of this long-term range. And when it breaks down of this range, right, I want to be a seller, right? The sellers are now in control and I'm looking to sell in this market condition. So now the question is, where do you sell, right? So if you look at this chart, where is the area of value? I'd say, right, this, right, around the 85 cents over here because the price has tested once, twice, 3 times, broke down. This is where previous support could now become resistance at this area over here. So I'll be paying attention to the 85 cents level. I don't have the tendency, right, to simply place a sell limit order at this level. I very much prefer, right, to let the price retest the level, right, gets rejected by it, right, to let the market show signs of weakness before I take a short trade. So the way I want to time my entry is by going down to a lower time frame, for example, the 8-hour time frame or the 4-hour time frame. So let's say I go down to the 4-hour time frame. You can see that now the price action is much clearer, and you know what to do exactly because your bias was actually received, right, from the higher time frame. You saw that earlier on a daily time frame. Market broke down of the long-term range. You know that this over here is a key area where previous support become resistance. This is an area where you want to be looking for selling opportunities, all right? And the beauty of using the lower time frame to time your entry is that you could get into the trade earlier, right, before the daily time frame traders. So this is how you actually use multiple time frame in your trading. So anyway, where was I, right? So okay, 4-hour time frame. So what I'm looking for is, again, just a very simple price rejection, price to come up into this level, comes up over here, then again kind of like a false break, right? Price breaks out, couldn't continue higher, smashes through below this area of resistance and close lower it, right? And at this point, right, I want to be looking to sell this market. And stop loss, right? Let's talk about stop loss. Where do you want to set your stop loss? Do you want to set it just above this highs? For me, no, right? And the reason is because the price could come back into this area of resistance, retest it again, giving you something like a double top before it collapses lower. That could be possible, right? Double top, triple top. So this is why I like to set my stop loss away from this level, right? For example, using the ATR indicator. So an example, let me just pull it out, this indicator. Okay, average to range. Okay, so this is an indicator that I talk about quite extensively, right? If you study my past videos, you'll know why. So okay, just pull out the ATR indicator and you realize that right now the volatility of the market is about 17, 18 pips. So what you can do is, if let's say the market comes up into this high, gives you a false break and it closes near the lows, you can take the ATR values, let's say it's 20 pips around here, you add on 20 pips from this high. So let's say this high is 85 cents. So you add in 20 pips to 85 cents, your stop loss will be about 0.8502, about this level over here, your stop loss, 502. Okay, so this is where your stop loss will be, which is, I think, 852, right? My bad, 8520, which will be somewhere about here, your stop loss. Okay, so in this case, you now have your entry, your stop loss. What about targets? So targets is something that is it varies from trader to trader, whether you want to capture a swing or ride a trend. If you want to capture a swing, okay, you want to ask yourself, right, on this chart, where on this chart might opposing pressure come in? Let me just hide this one here first. Where on this chart might opposing pressure come in? And if you ask me, right? It's obvious that this swing low is where potential buying pressure could come in. Price swings up higher, comes down lower, and let's say it swings down lower. This is an area where potential buyers could come in, to push the price higher. This is a swing low. So if you just want to capture a swing, you don't want to, ride too long of a trend, this is definitely a potential area to exit your trade. Okay, and for those of you who wants to ride a longer term trend, you could ride the trend on the daily time frame. You saw earlier, right, on the daily time frame, the price is still making a series of lower highs and lower lows. And if you want to ride the trend, a way to do it is that you can use, for example, the 20 period moving average. Okay, let me just give an example. The moving average. Okay, and we just change this to 20 period. Okay, yeah, mine is usually red color. Well, it's kind of like pink, but whatever. Okay, so you can see that over here, this is the 20 period moving average. So if you want to ride the trend on the daily time frame, you can trail your stop loss using the 20 period moving average. So you only exit the trade, right, if the price breaks and close above it. So that's another way to exit your trade, right? But this time around with the intention to ride the trend. All right, so hopefully that makes sense for you. And finally, right, another trading setup that I want to share with you is pound yen. So again, daily time frame, let's zoom out our charts, right? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, right? About 10. So if you look at this chart, right, what is the price section of this market right now? So long-term wise, if you look at this seems to be in a range, right? The market's still, within these highs and possibly these lows over here. And the market recently has broke above this market structure, this highs over here. So often, right, traders, they will get confused, right? Man, Rayner, what should I be doing? Right? Should I be selling or should I be buying? Right? If I want to be buying here, Rayner, this this bullish short-term trend, right? But I'm going against this longer-term trend. What should I do? So here's the thing, right? You have to ask yourself, what is the duration of the trades that you want to hold? If you want to hold it just for a few days, right, then you definitely want to be trading aligned with this current momentum over here, right? This is where the path of least resistance is. But if you want to, kind of like hold your trades for months or even other years, right, then you want to pay attention to where the trend is in the longer term, right? And in this case, the really long term one, it seems to be still currently, in this wick downtrend, right? You can connect this trend line somewhere about here. Okay, so really you have to ask yourself, right, what type of trader are you? Are you going to hold your trades for a while or much longer term? So for me, I don't hold my trades for years, right? So in this case, I would be giving, right, more focus, right, towards this bullish strength over here and looking to buy the dips. Okay, so now that we have our bias, what we should be doing, right, we know what to do. The next thing to note is that where are the areas of value that you want to be trading from, right? Where might opposing pressure come in, right? Where do you want to enter your trade? So this is where support resistance comes into play. So one thing I see over here is here, right? This is a key level. Another one is possibly at this one over here, the lows of this build up, this small tight range, and also this one over here. So now we have our levels drawn. I could definitely draw more, right? Possibly at these lows and this one over here, but it's not going to be too relevant for this analysis we are doing, because I don't think in the next 1 month, right, we'll retest these lows over here. So let's just focus, right, on the more immediate levels. In fact, I think there's another one over here that is worth paying attention to as well. Okay, this is where you can see the price break below this this range, this area of support. It broke down. This could now possibly become a resistance as well. So at this point, what I'm looking for is, again, right, I'm still bullish on this, right, because if you look at this market structure, right, higher lows is still intact. Higher lows and higher highs. So the only time that I will, go from bullish to bearish, right, is if the price can break below this area over here, where the price can come down over here. If it breaks down over here at this point, I will have a lower high and lower low. If that happens, I will shift my bias from bullish to bearish. So at this point in time, right, still bullish for now. And where I'm looking to enter the trade is, again, where is the area of value? And from the looks of things, I would say around here, the 141 area is a area of value to be entering your trades from. So let's say you can go down to the lower time frame, like the 8-hour time frame or the 4-hour time frame, right? In this case, I use the 8-hour time frame. Again, the concept is the same, right? You can look for a pullback, a retracement back towards this swing low, right? Market does a false break, closing up strongly back above this lows. Okay, if that happens, I'll be looking to buy. Stop loss can go 1 ATR below this low, somewhere about here. As for targets for swing trader, this is a level that you want to be paying attention to for swing trades, right, where potential selling pressure could come in, right? So this is a level you want to be paying attention to exit your long trade. Okay, so hopefully that gives you an idea, right, in terms of entries, exits, and stop loss. So those are three setups that I will be looking at for this coming week. And before we end things, I just want to share with you a couple of trades I took, winner, losers, right? And what happened behind the scenes. First one is dollar against the Sing. So for this market, again, it's at this point, right, when I look at it, to me, it was a long-term range. So let me just plot out my levels, right? Plot out my levels here. I would say another one here. And at a point in time, right, I didn't really consider this as a key level, but what I noticed is that the market actually did reverse from these lows, and we had somewhat of a inverse head and shoulders pattern over here. So this to me seems to be like a reversal where the price could possibly retest back this market structure. Okay, so what happened is that at this point in time, at this point, right, this was what happened. Market broke out higher. And I was bullish on this, right? I saw that there was this inverse head and shoulders pattern, right, leaning against this minor level on the daily time frame. So I was bullish, looking to buy this market, and with the expectations that the price could possibly retest this level over here. So what I did is I go down to the lower time frame as what I mentioned earlier. Okay, at this point in time, what I saw is that again we had this this is the same inverse head and shoulders pattern you saw earlier. This was the breakout of the neckline, price breakout, came back, retest, and it gave me a false break setup. So this is how a false break setup look like, right, at that point in time, right? It looks pretty good to me, right? Price came down into this level, right? Traded below this lows and closed aggressively, right, above support. So I went long on the next candle, stop loss 1 ATR below this low somewhere about here. And what happened next is that the market just simply collapsed and I got stopped out of this trade for a loss. Okay, so no issues with this. This is losses that I had. Part and parcel of trading. I don't want to give you the expectations that there will be no losers. That would be a lie. So yep, this is a loss for me on dollar Sing. And the thought process is actually very similar to what I just shared with you earlier. So hopefully, right, this manages your expectations that no matter what I share, no matter how good a setup looks, there will be losses, right? So embrace it. And finally, right, the last market I want to share with you is New Zealand yen, right? So let me walk you through again, right? Blank chart. Just zoom out a little bit, right? And the key thing that I was looking at is that this market, again, seems to be bottoming up over here, right? Then we have this one over here. There are just some simple levels to draw, perhaps over here. All right, so let me just adjust this a little bit. So I didn't really fine-tune the levels to the exact pip, right? Because this is not what this video is all about. If you want to learn how to draw support resistance, I got YouTube videos for that, right? You can check that out. But for now, I'm just drawing out the key levels that stick out in my face. And for this New Zealand yen, right, if you zoom out even more, you notice that this is nothing much. But why I went bullish on this is that there was this potential reversal or this inverse head and shoulders pattern over here, then coming to this area of resistance. And if you recall, right, whenever I say when you want to buy breakout, you want to buy breakout with a build up. And this is what I saw. Right? I saw that there's this nice tight build up forming at the highs of resistance. And how do you know, right? Some of you might be thinking, hey, Rayner, how do you know when is the right time to be buying the highs of the build up? How do you know when to buy the breakout? Because it might be still too early. And what I do is that I let the 20 period moving average be my guide. So if you just pull out your 20 MA, you notice that the 20 MA, right, has already come into contact with the lows of the price, right? You notice that it starts to kind of like, support the price higher. So this to me tells me that, hey, the market is ready to make another breakout, right? Because for the 20 MA to touch the price, right, the market must consolidate long enough for that to happen. And after this period of consolidation, to me, right, it's getting ready to make the next wave of a breakout. So what I did, I simply have a buy stop order above the highs of this build up, stop loss again just 1 ATR below this lows somewhere here. Okay, and in this case the market it broke out higher and right now seems to be consolidating. So I'm just trailing my stop loss on this, right? I'm using 3 ATR as my trailing stop loss, and whether it's riding a monster trend, whether it's a small trend or small losses, I have no idea. I'm just simply following my plan. And before we end, right, I just want to share with you another thing, right? It's that the way I manage my trade, it's different, right? Another trader what they could possibly do is that they buy the break out of this highs, but maybe they don't want to set their stops 1 ATR below this low. Maybe they think that if the price breaks out, right, then technically it shouldn't even come back into this range, and that's fair enough, right? If you are trading on the lower time frame and you feel that, hey, this is a market structure that should hold, you can actually have a tighter stop loss. For example, let's say on 4-hour time frame, okay, when the price broke out of this, that you saw this build up over here, the price broke out, your stop loss could be just somewhere over here, because you feel that if it breaks out, it shouldn't retest or come back into this area. And that's fair enough, right? That is something that you can do to manage this trade, right, on a shorter term basis. And in this case, right, your stop loss is tighter, and you could possibly, achieve a better risk to reward, maybe a 1 to 2, 1 to 3 already as of right now. Okay, so again, there's no right or wrong way. There is no best way to trade the markets. Ultimately, right, you have to know how much time you can devote to your own trading, right, and then trade the appropriate time frame with the right expectations. Okay, so with that said, right, that's it for me for this month's market analysis. Now, if you've enjoyed the market analysis, right, then I want to welcome you to join Pro Trader Sage, right? This is my premium membership, right, where you will get such market analysis every single week, right? I usually publish this type of videos on a weekend to share with you my insights of the market, the trading opportunities I'm looking at, the trades I took, and much more. So that's not all, right? Because as a Pro Trader Sage member, you get many benefits that come along with it. So for example, you have access to the backtest research lab. So this is a lab, right, where I pretty much backtest the financial markets to tell you what works and what don't in the financial markets. So we have different stuff going on. We have things that talk about stock markets, quantitative trading, and much more. So all this over here in the backtest research lab, and I regularly add in new lessons, new findings that I have in the financial markets. Then also we have the weekly trade alerts. This is basically, right, the video that you've seen earlier, but it's on a weekly basis. So every single week I publish such videos, right? So you can see my analysis, my thought process, the trades I took, and you can shorten your learning curve and quickly level up your trading. So you can see that every week we publish a new video on the markets. And moving on, right, we have a forum coming soon. So for those of you who are watching this right now, the forum might already be up. Okay, so this is coming soon. We have a premium trading strategy guides. This is for you, right? Especially if you enjoy reading my blog post and you want a PDF version of it. So every month we upload new PDF trading strategy guides. It's free for you to download. You can just click on it, right, and you will be brought to a PDF link, a PDF page to download it. We have a exclusive training webinars for you to help you level up your trading, learn new trading strategies and techniques. Okay, these are exclusive webinars that you will not find elsewhere. Then we have trading books and investing books that I recommend. Trading checklist, right? So before you put on a trade, you can download this checklist to review it, right, to make sure that you're on the right side, on the right page, right, and not doing anything funny or silly, right? We have the proprietary trading indicators vault. This is for MT4 users. You can download all these indicators to help you with your own trading, like the MACD, MT4. There's some issue with it. We have fixed it over here. We have the Donchen channel, news reporter that alerts to you potential important news that's coming up, and much more. It's all over here in the indicator vault. And also we have the simple mean reversion trading strategy that you'll learn, right, to trade the market. So this is a very simple strategy for you to get started, especially if you do not know which strategy to go with. Start with this simple mean reversion trading strategy, because it is back tested, right, to identify first and foremost which markets tend to mean revert, which markets have a mean reverting characteristics, right? Then I explained to you, right, the setup to trade this type of mean reverting markets, right? So you really have the odds in your favor, right? Applying the right trading setup in the right type of market condition. Okay, so this is a mean reverting trading strategy that anyone can learn, right, even if you have no trading experience. So this is what you'll get, right, as a Pro Trader Sage member, right? New content are updated regularly for the backtest research lab, weekly trade alerts, premium strategy guides, and much more, right? And also forum is coming up soon, so you can interact with like-minded traders. So I'll put the link below so you can check out Pro Trader Sage. And with that said, right, I hope you've enjoyed this video, and I'll talk to you soon.